Hi, everyone. James Baker, CPA here, your favorite international tax consultant. And today I want to talk to you about the recent closure of three major U.S. banks. We have Silicon Valley Bank, Silvergate Bank, and Signature Bank. And these are three banks that were closed because they didn't have enough money, basically, to pay back all their customers. And I want to just keep this video light, keep it short, and I want to keep it to the point as that so it can be useful to you. A bank in the US is only required to keep a portion of its customer funds on hand. And the purpose of a bank is to hold money, protect funds of its clients, and then also to loan out money to people who need capital. There's different rules and regulations on how much percentages of the money can be loaned out and what it can be loaned on, invested in, and all of that. And then there's different insurances that the banks are required to have to protect their clients. The standard FDIC insurance covers up to $250,000 of consumer deposits. So I have a bank account with Silicon Valley Bank and I have $1 million in the account, the bank goes under. Technically, the insurance only covers me up to $250,000. So it's really important to, one thing that we're learning out of this is important to diversify the holdings of your money. And also when you have over that 250,000 to know what your bank is investing in. The reason that Silicon Valley Bank failed, and in really short, really brief terms, is that they lent out and invested their clients' money, the deposit money, poorly. And then when the people wanted their money back to pull it out of the bank, the funds weren't there because the bank had lost the money, had poorly managed it, had poorly invested, and it just didn't have the money. Let's say the bank has $1 billion of customer deposits. It had over 120 billion, I believe. But let's say the bank has $1 billion of customer deposits. The bank is going to loan out 800 million of that. If none of those people pay their loans and it all goes default, and then we all want our $1 billion back, the bank goes kaput because they don't have the money to give out and they don't have the money to give back. And just Silicon Valley Bank invested poorly in a lot of startups and a lot of bonds, and they had to sell them all at losses because they're raising interest rates. And it just ended up not being a good play for them. So that's why they're being closed. And it's really important to note that what happened was the bank was selling bonds at a loss, and this was public, and $60 billion of funds, more or less, was attempted. I think it was $48 billion of funds were being pulled from the bank by consumers, and the bank didn't have the money to support that, and therefore it became bank. Hey, I hope you're liking the video. If you got value from this video, I want to invite you to subscribe to the channel. It really helps, and I see that 90% of the people watching the channel are not subscribed. Also, if you have specific questions, comment below, and I'll make separate videos about it. I'm happy to do that. Thanks for subscribing, and I'll see you with the next one. The good news is, well, depending on your perspective, but the good news is that the federal government is going to insure all of the client deposits. So while the bank potentially could have screwed a lot of people out of a lot of money, the U.S. government is bailing out the bank and bailing out the consumers, and all of the consumer funds will be returned. That means that even though if I had $1 million in the account and the bank goes under, I typically, in standard, only owed 120 or $250,000 of FDIC insurance. So technically, I'm only insured up to 250,000. What's happening now with Silicon Valley Bank is that the government is going to honor all of the deposits. So if I had $1 million, the U.S. government's going to print another 750,000 to make sure I get my whole $1 million back. So that's the good news if you're a client of Silicon Valley Bank and if you're a customer, and that's the good news, and a lot of banks in other countries don't have the FDIC insurance, and banks fail all over the world because this is how all banks operate. Unfortunately, they tend to be a necessary evil when doing international commerce. You just can't, unless you're fully crypto, unless you're fully whatever, it makes it very difficult. That's why Silicon Valley Bank went under, and that's really the effect on the customers, is that they have some drama they have to go through, but they're going to be able to get their money back, all of it, and the U.S. government is going to honor all the funds and pay everyone back. We're still waiting to see what the regulatory response on this is going to be, what the U.S. government is going to say to these banks, and what they're going to do and what laws they're going to change. I think it's all the people who invested in the bank, the shareholders of the bank, are going to lose a lot of money, but the actual customers and clients of the bank are going to be protected. Now, I want to show an email that I got because a lot of my clients are using Mercury Bank or using Relay Financial, and it's important to get a picture of what banks are investing in, because then you know how safe your funds are. If a bank is investing really heavily in crypto, which is super volatile. Like Silvergate and Signature banks are very crypto friendly banks that had a lot of crypto style investments. They're very volatile, and it's riskier. I want to pull up an email I got from Mercury Financial, because our Mercury Bank, because that's a bank that a lot of my clients use. It's a bank that a lot of my clients use, and they're apparently taking care of the money better. So Mercury, in this email, they said they are securing up to $3 million in FDIC insurance, which is more than 12 times the industry standard. And then they have something called Mercury Vault, and they, yeah, 3 million of FDIC insurance is pretty awesome. We have to see, and then they spread the money out between different financial institutions and different banks, and they manage the risk, and they don't invest it aggressively. I'm not really sure what they're doing or how they're doing it, but in the light of all of this, they sent an email out to all their customers. I have to check and see how Relay Financial is investing their bank funds, but generally it's going through a bank partner. And these online banks seem to be more aggressive in what clients they take and more conservative in how they manage the funds. Again, I'm not making recommendations, but I'm telling you what's important to understand is how your bank is capitalized. In 2008, I believe Bank of America was on the verge of collapse because of all of their investments in these bad loans that were all going to default. But the US government, again, protected them, brought them back, and made sure that they didn't go under. And it basically saved the whole world economy, for good or bad, for better or worse. It's a lot of people say businesses should be allowed to fail. For me, I just don't want to lose my money, and I don't want my clients to lose their money. And what we need to learn out of all of this is that if you have over $1 million or over 3 million in Mercury Bank, or if you're over the FDIC insurance limit on a US bank account, consider opening more banks, more bank accounts. It's the US doesn't need, or they're not required to bail out and give everyone their money on a failed bank. And it's hard to determine what bank is going to fail. But you really just have to take responsibility and take care of it yourself. So, at the end of the day, these banks have failed, but no one's going to lose any money. None of the clients, none of the people with funds on deposit at these banks. The government's going to step in and give everyone their money back. But that doesn't mean you should just let it happen again to you. So make sure you are working with a trusted bank. A large bank is generally going to be better capitalized. However, you need to know what the bank is kind of investing in if you're going to keep more than the FDIC insured limit in that account. And if you have $20 million, open a lot more bank accounts and insure the money and manage it yourself. And there's other things you can do. So I hope this video is kind of helpful. I know I'm just rambling a little bit, but I wanted to talk about the news of the bank closures and what it means. And it's kind of just another scandal, another drama, another bad business opportunity being bailed out by the US government, for better or for worse. And I think at the end of the day, no one should be losing money. But you still need to be careful about how you're managing your money, what banks you're using, and how you're operating your business. So I hope this was helpful. And if you have any questions, post them below. Okay, thanks.